Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on some of the most volatile names today that members voted on wanting to see. I added RCL in myself because I swung it yesterday and I want to give a little bit of a mini lesson on RCL at the end of the video. But we'll start it off with Tesla. Tesla was the highlight of my day, and it was the kind of thing where I headed into this morning saying, okay, Tesla is a lead bull. I know that. I also know we are extremely overextended with no hourly consolidation. So I'm not comfortable going bullish up here. And if I'm going to go bearish, stepping in front of this lead bull train, I better do it in a very risk-defined way. Very small risk, very clear, tight stop losses. And I said to myself, I was live streaming for my first couple of trades. I said to myself, okay, I'm going to attempt bearish trades on Tesla. As soon as I lose one, I'm done playing it bearish for the day. And that's just to prevent myself from just trying and stopping out, and then trying again and stopping out, and just getting in a bad habit, essentially. Pretty much if I break the streak and get a loss, I'm done with it. So fortunately, I ended up going 5 for 7, and the 2 were break even. So pretty much 5 for 5, shorting Tesla today, but none of them were big wins. All of them were flips for $3 to $5, which is, 0.5% to 0.7%. So none of my trades on Tesla were day maker levels as to what I consider or what my goal is per day. But when you add all those 5 trades up, it ended up being 2 day makers. So let's go into a couple little individual trades and show you how I was able to be plus 0.5% on my first 2 trades of Tesla this morning and wrong. I was wrong on both, and I went plus 0.5%, and that has everything to do with risk management and scaling in and out of positions. I was looking to enter bearish and see hourly consolidation. That's when I get my multiple day maker trade. If we don't get that hourly consolidation, I want to stop out. The last thing I'm going to do is enter a bearish trade on a raging bull and then just hold and get trapped. So what I did, I pulled up my orders here so I can get a little bit better picture. So my first fill is 730.60, and that happened here. So what I said, I was live streaming at the time, and I said, I am looking for enough of a pullback on the 1 minute time frame that I can anticipate a 1 minute lower high is the most likely scenario, and my stop then goes above the high of the day. So I entered at 730, and my stop was going to go above 737s. And I ended up scaling out. First exit was 726. So at that point, right after that sell, the break even of the rest of that position is in the upper 734s. And I ended up exiting the second half at 728. So again, not a big win in any way, shape, or form. I ended up, that was probably a 0.4% win. The second trade that I entered was then looking for a 5 minute lower high. So I said, okay, we got our first little pullback on the 1 minute. I'm going to zoom out and you look for a 5 minute lower high at this point. So we had the high of the day at 737.59, and I wanted to top fish that resistance level. So what I did was make a bearish entry right here. And that entry was at 735. So I made a bear entry at 735. I put my stop over 738. And then again, scaling out. I exited half of that position right at 730. So there's a 5% win, and my break even on that trade, not 5%, a $5 win. And my break even on that trade is now 740. I then wanted to ride the second half, and I put my stop above the high of the day at that point. And you can see here I got stopped out on that second half. So I lost $3 and change on half of it after making $5. So again, still green. So that's 2 green trades on being wrong both times. From there, my biggest win of the day was a re-entry at 736, looking for a right shoulder on a 5 minute head and shoulders. And again, using the high of the day at that point as my stop. So entered at 736, stop goes over 742. I sold half at 733, I think. So then at that point, almost break even for where I was going to get stopped out. And then I went outside. I placed my stop loss and I went outside for 20 minutes. And I came back right here and covered the second half. So that was my biggest Tesla win of the day. But just want to show an example of small, tight, discipline, risk management leading to being wrong and making money. And when you can master that, and again, a lot of it has to do with scaling in and out of positions, in my opinion, but when you can master that, that is when you have so much control in this game of trading that it's very powerful. So again, getting into trades where I sell half and I am then in a risk-free or very low-risk trade, and then I try and let it play out for a big win, is something that has benefited me many times in my trading career. So Tesla, big picture, where do we stand now? Daily time frame, is that a bearish reversal candlestick? Yes, that's a shooting star, and it's also a potential volume climax. That's the highest volume we've seen in weeks. Are we in an hourly uptrend still? No, we broke the low of the day at the end of the day. So high of the day, hourly higher low is 706.56. I missed this top fishing play. Rejected from the high of the day by $3. That was a beauty. So another hourly lower high, and then the bear break under 706.56 at the end of the day. We can see some strength in after hours. Pretty much, I'm going to have to see the bears break 692, the low of the day tomorrow, for daily consolidation to be underway. After 692, we have gap fill. There's no previous price levels for support, and there is some ground that the bears could cover, keeping in mind we are going to form a daily higher low next time we consolidate, because anything above 446 is a daily higher low. Bulls have tons of space. Amazon, blue sky breakout, increasing bull volume, bulls in full control, very strong close, hourly uptrend remains intact. Bulls tried for an hourly bull flag at the end of the day. If we start tomorrow red, I still consider anything above the low of the day as an hourly higher low. If we start with a gap up open tomorrow, our hourly higher low will be 2270 from the end of the day here. As far as resistance goes, 2,300, 2,350, 2,400 psychological resistance levels, and that is a beast mode recovery and extremely impressive. Congrats to the bulls that bought Amazon weakness. The logic was there. Amazon shouldn't be seeing too big of a hit. Whole Foods, I know people are stocking up on groceries. People are still ordering on Amazon. Amazon's hiring. And in the end, the price caught up to what was logical in the sense that Amazon probably shouldn't be getting crushed with the rest of everybody based on coronavirus. So a nice new all-time high. When we lose the hourly uptrend from here, anything above 1889 is a daily higher low. And we have not lost these stair-step daily higher lows the entire bounce. Shop, bull break over 470.57. So a convincing follow through on this bounce. Now we're looking at 500 psychological, and then 514 is the next resistance level. Again, the hourly uptrend is our short-term guide. The burden of proof is on the bears, and the bears proved absolutely nothing today. I would consider anything above 476.49 as an hourly higher low. When we lose the hourly uptrend and confirm the hourly downtrend, we have plenty of space to look for a daily higher low, anything above 334. As far as the weekly chart goes, we are still looking for a weekly lower high. Anything under 593 would give it to us, but there is no sign of a top being set, and a tight range did just break bullish. So shop bulls in full control of the short term. 514 next resistance. SPCE had a big day today, also breaking 1839. So a lot of names were setting up for the potential of equilibriums and tightening ranges with an inability to break the high of their bounce. And if you watched yesterday, RCL, that's part of the reason I entered bearish yesterday, was anticipating the lower high. But because the SPY bulls are keeping up their strength, we're seeing now one by one these laggards, these names that did not see bounce follow through initially, they're getting it now. So breaking 1839 is a great sign. 2112 is the next resistance level. Hourly uptrend is our short-term guide. Consolidation at the end of the day. Same thing, if we open lower, I consider this the same hourly consolidation from the end of today into tomorrow, as long as we hold the low of today. If we open higher, our hourly higher low is 1813. When we lose the hourly uptrend, bulls have plenty of space. Anything above 1210 is a daily higher low. Weekly time frame was a bear flag, and with this break today, of 1839, the odds of a weekly bear flag decrease very significantly. We're still nowhere near 42.49. We're still very likely to form a weekly lower high compared to that level, but the bulls are at least giving themselves breathing room to form a weekly higher low whenever this bounce does top out. BA, did get some airlines news after hours here. A little bit of help, but not really doing much. So BA, a lot of weakness today, and certainly standing out because there was so much strength elsewhere in the markets. Closed at the low of the day 3 days in a row, pretty much 5 days in a row. We've closed at the low of the day. And I am viewing this as our low of 89, high of 186.48, higher low of 120, lower high of 164.80, and we're looking for a higher low compared to 120. If I'm going to bottom fish 120 support, I have to know a number of things. Number one, this correlation does not favor the bulls, because if the S&P 500 sees any notable consolidation, we're not positioned well, already approaching support and already being multiple days into a pullback. Number two, I want to see the hourly RSI as beat up as possible if I'm going to make a bottom fishing play off of 120. So I want that hourly RSI down in the teens ideally if I'm going to have a good high probability of a bounce to maintain 120 support. But for the next couple of days, we are looking to see, can the bulls change the hourly trend back in their favor to set a daily higher low compared to 120 and continue giving us a tightening daily range. RCL, so I exited my short today as soon as the high of yesterday broke 36.70. Fortunately, I was only swinging half a position, so I definitely gave back some gains from that short, but not all of them. One thing I want to point out, first we'll go over technical analysis and then I'll go over some specifics of a trade, but at this point our daily higher low is now 33.25 and the most important resistance is 45.12. If 45.12 breaks, that's our first daily higher low and higher high on this entire bounce attempt. We went straight from the low to the high to a higher low, lower high, higher low. The most important range is 33.25 support and 45.12 resistance. We are currently $7 plus below resistance and only $4 above support. So we're still in the middle of this range. And it's going to be the volatility on these airliners and these cruise liners, specifically the last 2 days, the cruises. If you are a day trader, watch the cruise lines because they have some great volatility. Just use smaller positions like I talked about yesterday. The trade I want to point out today was using pre-market and using the order book. I don't use the order book on names like Apple and major high volume names. And the reason is on small cap names, whether it's penny stocks or low cap or the MJ sector, or in this instance, pre-market on RCL, 35,000 shares was a big order pre-market. If you put up, 35,000 shares, that is a couple $1 million at most. $1 million to $2 does nothing to Apple in the middle of the day. But on some lower cap, less volatile, less liquid names, it's meaningful. So the point is, in pre-market, I was watching this run up, and the high of yesterday was 36.70. I said, okay, the bulls are getting extended on the 5-minute time frame, heading to high of yesterday resistance. What caused this surge here? A big bid, a 35,000 share bid showed up at a specific price, I forget what, and then as soon as that order showed up, bulls started buying at the ask because they say, okay, well, if a big bid is sitting at, let's call it $36, I can buy at 36.10 and put my stop under that big bid and have very tiny risk. And if that bid holds, I stay in my position. So I've done that many times. I've made many trades based off of a big bid or a big ask and put my stop right above or below it. But in this instance, it showed up, the bulls reacted to it, and then it moved up. And when it moved up, the bulls reacted to it again because it's confidence. They're saying, all right, we got this support. The next biggest order on the order books pre-market was 10% of that 35,000 share size. Then I observed the bid got pulled again, and as soon as it got pulled, I started seeing massive buying at the ask on this candle. Just constant buying, 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 huge surge up. And if we want to zoom into the 1-minute time frame, you'll see just how significant it was as far as just the speed and the bulls reacting. So at that point, I say, okay, it moved up twice. That tells me someone is either pushing the price up or they want to be filled. And the fact that that order was pulled and now I'm seeing massive buying at the ask, I am making an assumption that that bid got sick of waiting for their shares and they started buying at the ask. And then as soon as that buying slowed down, there's no more capital. That bid support is gone and they've used up their capital to get their position. So at that point, and combine that with the fact that we double topped at the high of yesterday, I went short at 36.60 on this initial rejection. I put my stop over 36.71 and then I rode this pullback and I did have my buy to cover at 35.90. That was the bottom and I didn't get filled, so I had to move it and I covered at 36. Again, not a huge trade, but that's a 2% trade, a little less. That's a 1.5% trade based on observations and based on level 2 and some assumptions, absolutely. But that's just an example of something that I have picked up over the years. That's multiple years of experience giving me a 1.5% win pre-market this morning. So the takeaway from that is, number 1, be observant. Number 2, make note of patterns. I've seen this happen multiple times in the past, so I knew to be watching for it. And number 3, experience. Years. I was an okay trader for my first few years. I was a pretty good trader year 3 and 4. I became a good trader year 5 and 6, and I would dare say I'm becoming a pretty darn good trader year 7, 8, 9. So this is a marathon game. And if you're on year 2 and 3 and frustrated, year 5 is when it really clicked for me. That's the takeaway. Make sure and do some good things in the world, and we'll see you tomorrow. Radishes are fairly close to getting ready to start nibbling at. Guess they'll probably need another week. Potato plants getting bigger. Planted some Brussels sprouts and some cabbage in front of the peas that are climbing up. Pretty much every morning I attach their tendrils to this chicken wire. And it's so crazy to watch the difference in the species, because you have this species, and I don't know which is which, but this is what they're climbing with. It's like an octopus tentacle that grabs anything and everything nearby. And the other species on the other end here pretty much just has 3, and it is much harder to get them to grab onto stuff. Much more finicky. There's my shadow head in the way, but pretty much have one chance. Lots of Chinese pink celery. It'll be interesting to see that grow. I've never grown this before. Lots of carrot sprouts. Haven't started thinning those yet. I'm going to let them get a little bit bigger. And I have started thinning the beet sprouts. They're a bit bigger.